The fourth one is the competency. The competency is the skill of the auditors. The auditors should be have knowledge, skill and experience. Three things is very important for competencies. The auditors should follow the international standard for professional practice of internal auditings. Auditors should go for the auditors rules and regulations for the international standard for professional practice for internal auditings. I can go on. The next one is the professional independence. 1.5 is the professional independence is the auditor should be independent, freedom. The independence means auditors work the freedom, feel free and work. I can say that feel free and study, feel free and work. You should do everything for the auditors to feel free and work. We should not disturb the auditors, we should not discourage the auditors. Whatever auditor will go for genuine way to correct the accounts. We correct the all accounts. You can say what are the accounts. I can say what are the accounts in the accounting. I can say the transactions, journals, ledgers, subsidiary books, cash book, three type of cash book, single column cash book, double column cash book, triple column cash book. Another one is final account. The final account is three heads. One is trading account, profit and loss account, and balance sheet. And the remaining fund flow statements, cash flow statements. Another Layla. You can see that. Another you can correct. These are the books account auditors should give for freedom to correct. That's why professional independence means you want to give feel free and work. Feel free and work. Again, we should not disturb his objective. You should not disturb him, or you should engage everything. Whatever he is asking, we should be ready to give. Ready to, I can say, whatever auditor we ask, we can ready to throw. I can say, ready to throw the books, not to throw. We can throw the books. I can say for just indirectly. I am saying like that. That auditor here, the independence, I can say the auditor independence approach one. Approach one is the auditor manage the self-managed super funds. I am going to talk about self-managed super funds. Super funds. Self-managed super funds. Self-managed super funds. Can say that self-managed super funds means there are two types of the funds. For example, for our property art businesses, own funds. Own funds is share capital and reserve funds. Another one is borrowed funds. Borrowed fund is borrowings. Deposits. These are the, I am talking about here self-managed funds we can take from the own funds. Own funds we are collecting from the share capitals and from the reserve fund, what we are keeping the fund reserve fund. These are the own funds. How we are going to manage auditors? Any problem arise these own funds and self-managed funds. Any problem will arise, the auditor will give the report. Any violence on the self-management, auditor will give the reports. Auditor, if the self-management funds is failed, auditor will give the reports. These are the, you can say, the Clanter. We are giving the best example. Clanters. What he said that he, for example, he said Australian Tax Office, ATO, Australian Tax Office. Another one is the Australian Security Investment Commissions, ASIC. These are, for example, is giving that if the self-managed funds, if any people are violated, auditor will give the report very seriously. Investigating auditor will give the investigate. He will give the report for improvement of the self funds. Three things is there that the one is the fund is I can say that the self-management fund is breach. I can say the violate if the fund is violate. The second one is if the fund is the malpracticed, or again I can say that violate is when the auditor is monitoring, and monitoring means checking. He will give the audit review of these funds. These are the examples for then the Australian Tax Office ATO, Australian Security Investment Commissions. They are doing just like that. Yeah, this is the best example I was given here. Just you can read it. That finally they started the working cases of where we are concerned about the auditor's compliance fulfillment. Whatever his auditor is, this self-managed funds, when any people are violate and break these, will give the report. They are giving whatever the compliance you want to fulfill the report. You want to fulfill the report seriously. These are the examples you can give with it. That another he says the clutter. He says the 6 problems are at the self-managing superfund. 6 problems. One is self-review tax. If the self-review tax, when the auditor is asking when the auditor is prepare someone to accounting of the funds, when the auditor is preparing someone to the employees, when he is asking about the fund, that time the problems. He should be secretly, he should maintain the secret. Large organizations, maybe this fund will be more practiced or something will happen between something will happen. It's the one is when auditor will ask for self-purpose, what is going on when the auditor, that's why self-review. First he will ask how the management, he will check the first one is own salary and reserve fund. This auditor is very difficult to such kind of made in the small firm. These are the self-managed funds. We can manage only the big type of the organizations we can do, but small organization it is very difficult to checking this the partners and the staffs. We can checking very difficult. He says like that. The second one is self-interest. When the problem is urgent, the auditor has only the client and one client reference and significant proposals of their business. I can say that their independence is threatened. Any problems because of they will be less likely to be want to see the qualified audit opinions. If any problems arise from the client, or clerk, I can say here in the clerk is the purchasers, third party is a banker, third party is vendors, suppliers, tax authority and customers. I can say like that understanding purpose. If the auditors here, I can self-interest, you want to give qualified audit opinion, report to the self-managing superfunds. The second point is self-interest. The third one is multiple recommendations threat. Multiple recommendations threat. If lot of comments will come, I can say lot of problems will come. When the auditor receives a large number of the information, when the auditor is receiving a large number of the informations, it may be he will submit the report received based on the informations. He will recommend. The auditor will recommend based on the informations. Is a big issue. The point. Finally, I can say multiple referral threat is. Finally, the auditor is giving the issuing qualified report to the organization. Auditor should be issuing the qualified report. Qualified report means the correct report of the organization. Another one is X stop and partner. X stops, old stops members and partners. Partners will create the problems. The auditors will give the report on that. What problems the X stop and partners will create? Stop members and partners leave to start. They are leaves and starting their own business and performance. They are leave, that time the problems will exist. When they are leave and already left, the problems will come. That time auditor will give. You still have look all the other aspect of the independence, particularly including the familiarity between the people and the accounting firm and the auditing firms. The auditors just gave these roles, accounting and the auditing separate parties does not necessarily mean the independence. When the problems created by the ex-stop and partners, auditor will give correct way of the accounting firm is separate and auditing firm separate. Two people manager gives accounting is separate and auditing. Accounting is accounting books, auditing is only the checking the books. Fifth one is advising threat. The fifth one is threat problems occur self-managed suit for funds. The auditor also provides the financial advice to the client. Another one is the advising the threat. Auditors advise. Finally, the auditor is coming to advising threat. A financial advice to the client. Client means I can say the customers. Right? Client. I can say that the client and the third parties. Client. You will give the maximum the client is, I can see think the purchasers. Main is the purchasers, suppliers, vendors, and give some financial advice to not only the client and the third parties. Auditor will give the advice to the client and the third parties. He will give the financial advice and the recommendations to the clear of that. The sixth one is relationship threat. Relationship threat is that all the peoples, I can say that client, third parties, I can say that these two are inside the organization, oners, can say that oners, and the employees. One side is owners and the employees. Four things we can think the relationship with the organizations. Who are relations between the organization? That person, all people are called stakeholders. Who are the stakeholders? Who are connected with the organizations? That all people are called stakeholders. We have said that. These things, that relationship, threat, any problems will come, auditor will give the correct decisions. The second example approach, auditor independence approach to another auditors, the independent approach. What are the approach? One is the framework approach. We give the framework, the fundamental ethical principles. These are general principles. Framework means framework. We give the framework of the principles, values, like that. Another one is the non-audit service. Non-audit service, we can give the auditor will give the opinion about the non-audit service, about the sources and many things he can give. These are the not accounting systems. Non-audit service, not in accounting. General advice, I can say the general advice to the organizations. Next one is the 1.6.
Half an hour.
The 1.6, independence and conflict of interest. What do you mean? Independence means, before I said separate. Independence means separate. And conflict of interest. What are the conflict? Auditor's independence and conflict. What are the conflict? The accountant is public practice and should be independent separately. In fact, the appearance is providing the audit and other attestations. The accountant is the public practice. Accountant is separate. Accountant is accountant who's writing the organizations. There are a lot of books. The accountant is there. Some persons they write all the accounts. The auditor is monitoring the accounts. The accountant is writing the accounts. They will close the accounts. Every day accounts, weekly account, monthly account. They will close and they will close the account book also. They will close the account, they will close the account book, they every day. But auditor is the monitoring, checking the accounts. These are the difference between the accountant and auditors. The auditors follow the American Institute of Certified Public, I can say the certified CA, certified accountant. The accountant, the independence, the separate will be the impaired if damage or harm in the accountant. Make the investment decisions behalf of audit the clerk organizations. Otherwise, the authority over an audit cleared organization's investment. The audit, why the auditor is independent? I said that the executive complete the transactions buy or sell the audit cleared investment. Audit clerk means audit organizations. Second one is custody of asset of the audit clerk. Whatever the asset should be custody asset. The accountant may be provided certain advice service to the audit clerk without damaging the independence. Accountants and auditors, for example, the auditor is coming and the accountant. The accountants will give some certain advisory to the auditors. Some advisory. Auditor will ask so many questions to the accountant. Auditor anytime call any persons. We cannot, the auditor will not call for Sunday or so. The working times. Auditor will call for the working times for any stakeholders. You can say that any stakeholders, especially for the accountants. These things discussed is not damage the independence, but damage the independence. The recovery, the allocation of the fund, the audit clerk, should be invest the various assets and classes, the clerk risk tolerance and the other factors. Then the allocation of fund, how much the auditor will ask so many questions. Allocation of the funds. Providing the comparative analysis, the audit clerk invests in the third parties in the report. The auditor will ask everything from there. Auditor has right to ask. Is that the auditor? Auditors will ask from the here right to ask clerk. Let's say third parties. Other connecting other peoples. Whose are connected? Auditor have rights. Auditor have rights. Others. Then especially for clerk and the third parties, the auditor, especially for the these finally you give the auditors the organization portfolio database. When you will collect everything about analysis, you will do the portfolios, right? And you will transmit the separate audit cleared on the organization investment side and broker dealer and cleared purchases, everything A to Z. And then if the auditor, they can catch it with the clerk and the third parties and the others. Who's all connected with the organizations. Auditor have right to ask you. This is the auditor independence. This is the auditor. Accounting independence, separate auditor. It's not disturbed from the accountant auditors. They get separate. Accountant is getting separate independence. Auditor is getting separate independence. It should not damage accountant independence and the auditor independence here. It should not conflict between the auditors and the accountant. The accountants will go for the accounting rules and regulations. Auditor is going for the auditing rules and regulations. The both people should not damage this. Finally, they will evaluate everything. They will submit the report to the organizations. The next 1.7 is other rules of conduct. The other rules of conduct, the last one. The integrity. The integrity, I told you again, same the rules and regulations is coming the same. The rules means in total audit, the repeating the rules. I can say that integrity, objectivity, confidentiality, competency. These are the rules again and again will come. We cannot avoid. But this rule is the integrity where we can apply to the integrity, honesty to the organization, honesty to the third party, honesty to the accountant, honesty to the auditors. Where we can apply these rules. These are the points are the same, but the auditor integrity is different. Accountant integrity is different. You should understand this. Integrity is different. You should finally the honesty is the common way, but this where should use? Where should use? This is the audit integrity. The integrity is honest of the auditors established by trust to provide the basis of the reliance of their judgment. The auditor should be the honest. Finally, he will give the report to the judgment. What judgment means? Like moral. You can see in the court, judges, what they will do? They will give the judgment very clear. Judges means like gods of the persons, like God. You can say the judgment. Judgment is, I can say, moral. The auditor is they give the judgment. We are thinking about the auditors is like judges for the organizations. It's like judges for the organizations. He should be honest. Why I am saying the judges, the auditors should be the honest of the organization. I can say that auditors sell honesty, fairness, integrity, and ethical conduct. And respect the detection of the program on goals and visions directed auditors. The detection of the goals and visions of the organizations. Auditors should follow the Institute of Certified Public Accountant. The auditors who are the auditors will go for the code of ethics. Auditors without conflict will go for the code of ethics. Auditors respect honest to other auditors. The auditors respect to the other auditors, organizations. Not only the auditors, all people, I can say that. I can say the command obey the Workers' Compensation Act and the Occupational Health and Safety obey. They comply with the Workers' Compensation Act. They are not responsible themselves of the employees and client interests. The auditor should be the auditor cell. It's an auditor cell. Again, I say the honesty, fairness, integrity, and ethicalness. These four main points is important for the auditors. Auditor, I can say an auditor should be, I can say, auditor cell, instead of saying auditor cell, auditor should be the honesty, fairness, integrity, and ethical conduct. These are the very important for that other rules and regulations. Second one is objectivity. Objectivity is, I can say, independence and separate. Auditor should be free from work. Auditor is the higher level authority persons. Auditors who are completed the persons of CA certified public accountant. Who are the certified public accountant? Who are completed CA chartered accountant? There are four chartered accountant. ICW, International Cost Reporting Accounts. S is Yes, I can say. Advanced corporate secretary. I think. These are the course for accounting. These are the course for you became an auditor. These are the course for became an auditor. These are the chartered accountant, international cost code, and corporate secretary. These are the three courses became an accountant. But main course is chartered accountant. Chartered accountant, if your demand in the chartered accountant course is high demanded in America, high demand. Now also there are vacancies, about 20% is vacancy in years, 20% vacancy. But nobody is committed there in America, 20% is nobody is committed. Chartered accountants, they will pay high money, but no one is competitive. No one is fulfilled throughout the world in the chartered accountants. It is very hard course and very difficult to complete this course. Last year I was taught about this course. Although auditors must be show the highest level of the auditor will show the highest level of the profession is auditor will show the gathering the informations, evaluating, communicating information about the audit activities. Auditor will gather all informations, gathering, communicating. These are the audit, should be the independent auditor. We can feel free about auditors. Auditors can conduct the audit protocol practice without any bias and prejudice, variance. Auditors will be without any bias, is not be bias. Most of the auditors now, they are in the organization, many companies, for example, for made in India, there are so many auditors, they are writing the different accounts. Whatever the transaction, real transactions, they are not right. Real transactions, they are not right. If they are modifying the accounts, and finally the organization is going lost for every year. Most of the organizations, the auditors are giving report like that. Most of the organizations. Auditors should not be biased. The auditor, everything is auditor's hands. Most of the organizations are now going, they will submit the report in the auditor submit the report. Most of them lost. We can modify anything in the accounts. Anything the auditor can do. Nowadays, we cannot expect from genuine auditors. Genuine auditors are there, we cannot expect. All auditors we cannot expect genuine. Then bias is there. We can go for positive, we can think about the negatives. Remaining free, any influence of interest, people, any professional judgment, independent subjectively, while providing the audit service, any influence of the interest, an auditor will face any influence. Can auditor modify everything with any influence on? Auditor must not market the service to the any time to the auditor. Auditor should not market the service is like this. I can do anything. Auditors should not be marketed. Disclose under any potential personal conflict of the interest during initial contact and conflict with the client. Auditors will be disclose any information which be disclosed with the client. Disclose, we are communicating with the client and disclose. Without auditor will not communicate with the client, he will not disclose any report. We discuss with all the stakeholders, I can say all the stakeholders. Client is very important persons. You can say client is that mean the purchasers, the purchasers, I can say. Third parties, I can say the suppliers for understanding purpose. Auditors will do that. Auditor must avoid conflict. Conflict means disagreement of the interest of all times. Auditors should be avoid conflict, always disagreement between the clerk and the auditors. Disagreement between the the third parties and the auditors. Disagreement between the owners and the auditors. These are auditors should be avoided. These are the auditors. These are the things is enough for the second one. Okay, just I lost some point. The business relationship between the maybe perceived unreal to the business relationship auditor should be relationship between should be the reality. It should not go for unreal. The relationship between organization and auditors should be the real. It should not go for unreal. Auditor must not conduct two consecutive separate audits in the company. Audit should not be conducted, I can say, two times in the per year, 2 times. He should not conduct the audit. It is not good for the auditors. Auditor only one time, if he finishing the task is very good. Again, 2 times, 3 times, 4 times per year, it is not good for the auditors. The main both the actual and present unreal political neutralities. Not most of the political neutrality, they are politicals. It's not discuss the main both actual and perceived unreal political unreal. It should be real activities. The perceived unreal conflict. If a real conflict is accepted, you should avoid the unreal conflict. Unreal conflict is avoided. Real conflict, I can say from there, my opinion, no problem for the real conflict. Real conflict, no unreal conflict. Should avoid throughout this. The third one is confidentiality. The secrecy. Confidentiality means secrecies. Auditor must respect value and honor of information they receive during the audit. Auditor must be the respect. Security auditor is the very important person of the organizations, and the auditors must be the respect to the any organizations, and he should not disclose any information from the third parties. The third parties auditor does not disclose without asking permission from theirs. The third parties, why auditor not disclose any information to third parties? This is the third party. Auditor should not disclose any information to the third parties. Why? I am asking the why. He should not. Auditor should maintain secrecy. The third parties people are the beggars, taxpayers, and suppliers, and other people, customers. They are, the organization is borrowing money from the bank, and the suppliers are supplying the material to the organizations, and the organizations should pay the tax-paying authorities and the customers. Everything the organization is borrowed from there. That's why if the organization is lost, for example, if the organization is lost, the auditor is disclosing information to the third parties. It is a big problem arising in the organizations. The auditors will disclose the information only the owners, only the boss of the organization. If you disclose, auditor will disclose the information for the third parties like bankers, like tax authority, government, and another person, and customers, and suppliers, because of they borrowed many things from their credit. If you disclose, immediately big problem arises. That's why the auditor should not disclose any information to the third party without getting appropriate authorities, without getting appropriate authority permissions. Auditors, the role is the checking accounts and the submitting report, but it should be secrecy. I say confidentially means secrecy. or is not disclosed to the third parties. That is the main concept of this point. The maintain secrecy of the information, maintain the confidentially secrecy of the informations. Be prompt, careful with the use of the information. Auditors will be prompt, careful in the organizations, their work, and take all reasonable steps to protect and confidentially of the audit result. Everything the audit result should be the confidentially and not use audit information to any personal. Audit information, the auditor should not use to any personals, not share and either profit and otherwise the auditors. It cannot, auditors not share the all information. The fourth one is competency. Competency means skill, capable, skill, ability, and aptitude. I can say auditor must apply the knowledge. Auditor is a knowledgeable person. So it should be otherwise he will not be audit. Auditor must apply the knowledge and skill, experience, and performing the audit services. When he is doing the audit service, he use the brain. I can say knowledge. Everything is the brain. Brain means I can say knowledge, skill, and experience. Use the brain. Use the brain should not be empty. Use the brains. Auditor engage in all those services, necessary knowledge, skill, and experience. Be consistent. Auditors will be consistent, steady and accurate evaluation of the data. The try hard to complete. Try hard to complete their evaluations and avoid any omissions. Complete their task. Complete their all evaluations without any omissions. And separate fact from the opinion clearly and consistently brief quickly their evaluations separately and quickly their evaluations. Auditor opinion must be tried the result from the quantitative measurable data. And service to the client and diligent and respectful and efficient manner. Auditors should service. And auditors, they conduct themselves with almost professionalism and without any bias. Auditor without any bias can conduct themselves. The other one is committed to the honest truth and straightforward communication. Auditor should be the honest and straightforward, face to face. Everything straightforward means face to face communications. Another one is they continuously seek the main and improve their proficiency and efficiency and quality of their skills. They continuously seek the main, the quality service. They should give the quality service. They willingly and openly share their collective knowledge. So they collective knowledge. Willingly he will collect the knowledge. Without willingness, willingly he will collect all information to the employees. This first chapter is over. Next video, just I can upload upcoming days. Thank you very much for my student. Just you can enjoy my videos. If you have any doubt, you can ask through Telegram or WhatsApp or email. I can solve your problems. This video is only for the student, not for others. You should not share with my video to other persons. Thank you very much for my student. Bye.